Okay, I believe we're live. Welcome aboard, guys. As always, fantastic to see you. I'm going to let everyone in and get things kicked off so we can get started. If you're watching this back on YouTube, don't forget to like, subscribe, comment, and share. I've just started posting more and more stuff. And as always, whether you're watching on TradingView Live with me or on YouTube, of course, you can go underneath this stream where free training is right there, and it'll teach you everything you need to know to get rid of the rubbish and get straight to what works. So if you are coming in, welcome. Press the like I said, YouTube, it's underneath. TradingView, it's underneath as well. The link to my free training, of course, exists right underneath. https://bit.ly/Wills BPA. If you're serious about trading for income, of course, once you're through that free training, you can contact me privately and I can help you from there, as I do people all around the world currently. So we've got lots to talk about, lots to discuss. This morning you had consumer price index, month on month for September, year on year for September in the GBP UK economic zone. A little bit of an effect on the UK stock market, which you can see over here. You had it drop slightly this morning, rejected down here, and I think you'll probably get something like this. I ultimately am looking down here. If you go up first, then down, that wouldn't shock me either. But today we're going to talk about a few different things, and I'm going to focus on a few pound pairs as well. For that reason, I know there's lots of people who want to trade these kind of pairs, so I'm going to focus on those. Before I do that, if you are someone who's trading something like gold, my bias remains short from the other videos I did. Silver, my bias remains short. There's nothing much to say. I'm still short. Oil, I would probably exit your longs if you had them. And the pound, dollar, and euro dollar, I'll just hold off until you get lower down. Okay. Indexes, of course, as well. I'm short on all of them. The US stock market, the Japanese, the UK, the CAC, ours. I think you're going to get lower. But there's a lot of guys coming in now. As I said, if you can press the boost button, please do it now. And press like on YouTube, share if you can. It really helps me out. Thank you so much. As always, everyone who's loyal and here all the time, there's loads of you I know. Lots of you DM me. Hopefully you'll come on board and start learning to trade correctly. So let's get into it then. Let's get started. So your pound New Zealand, if I go on the monthly and I take us back to the start of millennium, this is around the time I was born, believe it or not. I was born just around here, okay? I was born at this point. But anyhow, that's not the important thing today. What's important is where you had your September to October in the year 2000, okay? And then in 2001, you came up to the level which you can see here. Now, as I always say, and as many of you will know, I'm a factual person. I like to do things based on fact. I've always been like that since I was born, I would say. If it doesn't make sense to me based on what, is right, then there's not entirely a point in it. And there's no point in making things up. If you've seen price get to a certain point before, you've got the probability that it may fall from there again. It's the only informed judgment you can actually make, because it's one where you can say to yourself, well, it's come here before and it fell dramatically. It's come here again and it fell dramatically. It's not a shock. It's not a surprise. That is completely reasonable. And everyone who says, when it happens, it wasn't reasonable and they didn't see it coming, just has no idea what they're doing, basically. And the scene is the same now. Where we are with the pound New Zealand, and I'll talk about the euro New Zealand, etc. soon, is basically the same. Because what you're finding now is you've got predictability and you've got the ability to do what you did here. Okay, so it fell off a cliff in 1992. Everyone who shorted it did great. And of course, it falls all the way to here, down here. It comes up. By the way, it rose dramatically here as well. Do you think that's a coincidence that it just happens to do it again? I certainly don't. But nonetheless, you come up here and you fall again. You come up here and you fall again, and price goes like this, down, 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 and then it goes up and continues down. So this was probable because of price action, we've established. But now what you've got is consistent sideways movement for a prolonged period of time. Okay, so there's predictability in this, just like there was at those highs here. Now, you'll know if you followed me for a while that I said this was short, and again, it comes in with that predictability. If I'd just seen it fall dramatically from one point, why would I make my bias any different when it returns? Why would I think anything different is likely to occur than what I've already seen happen? That's how human brains learn, isn't it? At the end of the day, everyone learns to not touch the pan by touching it. Okay? Otherwise, you wouldn't know that it hurts when you touch a hot pan. Obviously, your parents or whomever, when you're growing up, can tell you. But if you didn't have those, you have to touch the pan to realise, ouch, it hurts. And it's the same thing here. You're touching the pan, and it did hurt, and it fell a lot. And hopefully, well, it wouldn't have hurt if you shorted it. But my point is, if you've seen something happen before, do you think that it's probable that it may happen again? Or at least more probable than not? Because it's happened 3 times now. Okay? So trading is all about that. It's never a coincidence that that happens. It is just how things work. Now, you had the same thing here, didn't you? Simply because you've got it there and it's no different. You came to this point. Where's my arrow gone? Here. You've seen over here that you've got a bounce. Again, it's no surprise. And I called it long around this area as well. Okay? Now you should be out of that long because what's happening now is a change in trajectory and bias. Now you've had this push up and that rejection, you're coming to a point where you could start to look short because what you're doing is you're looking for reasons, probable reasons, factual reasons as to why the market would fall from here. Okay? And that's going to exist probably on lower time frames. Now, I wouldn't be entirely shocked if you do get dramatically higher up here because I'll tell you why. The reason is because there isn't much in the way immediately. You can scroll back and look at these levels, but I think there's a good chance you'll get higher in your pound New Zealand. So if you are shorting, it is a short now. I'm not saying it won't fall. I'm just saying there's a risk that it could get significantly higher. So I would likely short at this point. Hitchcogs, I've seen you a few times in the chat. Tip, if you want to copy anything on your chart, then select and simply hold down Control and drag to your new position. Normally what I do is I do Control C and then I press paste. It pulls it there. But yeah, thanks for that. So yeah, pound New Zealand overall, there's a lot of predictability to it. There always has. Anything to the upside is short, okay, because you've seen it before. And anything to the downside, of course, you've seen various times the price hit long. Now, therein lies something really important. There are many people on here who will have come in and said, okay, well, that makes great sense. You know what? I'm just going to sell up here and I'm going to buy down here. And it doesn't work like that. I'm afraid there's a lot more to it if you're someone who's trading for income. You cannot simply just do exactly what I said because there will be times when the price goes away from where you want it, and that's why you need risk management and damage control plans, i.e. hedging DCA, max set sizes, and contingency plans based on the sentiment at the time, because this will happen eventually, as it did all this, and you've got to be able to deal with that if you want to make money long term, okay, because it's only going to take one time for you to be ruined. But just naturally, just look at the markets and you can make a very good informed decision, as you will have been for a long time now. So pound New Zealand, I like it short higher. Now, if I just swap to something like pound CAD, let's say, your pound CAD looks slightly different to your pound New Zealand, although you have gone relatively sideways, excluding this anomaly there. for a long period of time, and that's created a lot of consistency too. Okay, so price action comes into a lot of it, but price action is nothing unless you've got risk plans tied to it. That is what makes the whole thing work. So you've got these areas where price is pushed up. Again, like I said, price action levels and predictability, but this will happen eventually. And if you can't deal with that, it's curtains. It's going to go wrong. But to the upside, you've got many short areas. So naturally, my bias, anything that is lower like this, I would start to look long. I need to be more precise than that, and I need to use multi-time frame analysis to filter through what is a good level and what is a bad level. Okay, so my longs would come lower down here because I know that's a stronger price action level lower time frames, and within the higher time frames, I know it's also a strong price action level. So I can go through every price action level on each time frame and can determine it within my style of trading, and as I said, make a good informed decision. Anything to the upside where you've previously seen various levels of rejection for a significant period of time, i.e. reliability for new entries, then becomes a short, and that's exactly what you had at this point. Okay, that was a short, and the price fell, and hopefully you took it there, as many of my members did. So the pound CAD, again, similarly to the pound New Zealand, I'm looking for areas where I can determine that there is strong price rejection, and therefore I would be short. 1754 is the key for that, and then lower 1612. In between that, I'll probably take scalp entries and trade the market as it is, because obviously it takes time for it to dwindle between those differing levels. Pound odd, much of the same. I think you're getting the idea by now, although here is something interesting. If you go on your monthly and you look at this candle, you might say, okay, well, there's rejection there, so perhaps it will fall. But if you go, sorry, pardon me, if you go onto your weekly, what's happening is you're actually pulling onto very early weekly support. And hence, if you short, you'll probably get a bad entry. That is why you need to be able to use all time frames. That's why I teach people multi-time frame analysis. It's what all professionals do. You've got to be able to read the markets at each stage as one every single day. If you can't do that, like I said, it's not going to work very well. So within the predictability of the pound or pound CAD, pound New Zealand at this current point, you can see on your daily you are uptrending. I wouldn't be shocked if you get higher up to this point. That would be where I would short. Okay, even if it looks like it's going to drip down the monthly, you do not have valid entry for a short there because you've already fallen. So I would look short higher up. If I wanted to be buying this, perhaps if I was an intraday trader, I could take it long. Doesn't look entirely convincing on the very low time frames. I would say if you're an investor or a long-term trader, I would want a significant fall nearer this 40 MA. That would be very ideal. Anything down here, far more ideal. But again, it's going to take longer, so you have to determine your trading style. Often, if you're a longer-term trader / investor, like I said, you're going to let the market slide to a much more valid price point so that you can enter to the long side. Okay, and that's the point of the MAs. The reason why I use the MAs is because it allows myself to get a gauge for long-term periods of how valid price is. The closer the price comes back to moving average, the more in line it is with, for example, the last 200 candles, which is a wide set of data if you're trying to judge a long-term market, as is the 3, 4, 500 MA. 500 MAs are a lot more relevant for long-term traders, i.e. investors, like I said, people who can hold for months, years at a time. And again, that's similar to what I teach in my stock academy, because a lot of the time people are investing in stocks like I do. So pound dollar, like I said earlier, I think you're going to get under here. I think it's going to come lower. Don't sell it because it's already low. You're not going to get a good value trade, I'm not saying it won't go up. I'm just saying I would rather buy it for a more feasible price lower. Okay, especially if I was watching on TradingView and didn't have my course or my mentoring. Remember, you get 3 months mentoring with the entry. If you are watching, press the boost. I've not refreshed it yet. I'm sure many of you have pressed it. If you can press that, or press like on YouTube and follow on TradingView, subscribe to me on YouTube. And the link for my free training is under the YouTube video. It's also under this stream right there. I would go and watch it if I were you. If you're coming back and you're someone who's followed me and watched me for a very long time, it's likely you're going to have to take action if you want results. Otherwise, you're wasting an incredible amount of time. I know lots of people like to watch me, and I know it helps a lot. But there's only so much you can learn for free before you hit barrier where you're either serious or you're not. So just bear that in mind for our mutual benefit. So we've done the pounds, like I said, UK news. It's just more negative sentiment added into the UK stock market. There's just piles and piles. Everything. Someone said earlier, everything you hear now is just negative with the UK economy, and I agree. I think it's going to come down. As I've been shorting it every single time for gains, many of my members have done this. One of my members yesterday shorted 77.04, so he would have woken up with sort of 80 points profit on the table, and I'm sure he's holding out for longer as a swing trader. Very predictable. So so we've done the pound New Zealand, pound CAD, etc. I will go over the the Euro New Zealand now. Cover that as an FX market. I'm just going to move my stream back over. Thanks to everyone who has pressed the like, etc. It's really handy. Euro New Zealand, I like short. You haven't had the initial reaction that one would probably favour. I would probably prescribe a light entry there, and then I like it a little bit more up here. And it's just because, like I said, the early price rejection on via multi-time frame analysis is far more feasible when you've got something that actually holds a lot of weight. It would probably look like that. But nonetheless, shorting back at the highs is always ideal. Lots of people will say, oh, it's a head and shoulders. Yeah, well, whatever. I mean, it can look like whatever you want, really. You can call it what you want. I think they're all just names, really. You know, people trade patterns and things. I'm not particularly a pattern trader. I just trade market value, and that's what works for me. But you've got the same thing like you had with pound New Zealand. The problem is for people who are trying to trade with no risk plans is that you'll have to deal with a candle wick that stretches from 186 to 202.006, which is obviously quite a long way. But there is predictability in this. Clearly, traders have used this area previously as price rejection. So anything higher up here is short. Anything before that is also short, like where we are now. And the reason why is because if you look at the spectrum of this candle, that you can see that that was an area of rejection too. So anything up here, I would prefer short, and similarly, anything down here, I would prefer it long, okay, because it's going to be where you've had long side previous price rejection. It also coincides very well with an amalgamation key moving averages, which is also very handy for longs each time. If I swap onto the Euro, okay, and I go on the weekly, you can see again, you're just coming on to very early price rejection / support. Okay, that's what's happening here. If you go to your monthly, you know, people get confused about this if they don't have my plans, but you can see that there's early rejection. So some people say, oh, well, it looks like it's going to come down the monthly, then it looks long on the weekly, then it looks long on the daily, but it looks short on the 1 hour. You're never going to get things right if you can't do multi-time frame analysis. Okay, and you don't understand how they move from one to another through the day, okay, and in line with their organization of data. Once you know what you're doing, it's a lot easier. But it's going to look long here, it's going to look short there, your stochastic's going to be this on one and that on the other. It's going to happen, but if you can't discern between what is right and wrong, then you'll struggle. But like your pound ord, you know, you're too late to short. I would only really consider shorting up there. If you can get a dramatic fall, I would look to re-long down here in line with this key MA. I would just hold off at the moment. You could intraday long if you're a trader like that, but again, you would need full risk plans. So shorts higher 1678. Again, just reflecting on price action there. What have we got? So we've done Euro. We'll go for EURCAD, and that will cover those pairs. Someone's actually asked for it quite conveniently at the same time. Thanks for that. EURCAD. So let's go through. You can see what you've had is really sideways movement. Okay, within that movement, I would really prefer it short. I think that those candle wicks have helped you a lot at this point. It is just touching resistance on low time frames. And therefore I would look short on your EURCAD. Yeah, you can see again with predictability, look what's happened. I mean, it happens on shorter time frames as well as very long time frames over years. It's the same thing. Price action is the same thing across any time frame. It's all based on what you can see has happened before. And you can see clearly rejection to the upside, support, and rejection to the downside. That's why it goes like this. And eventually it gets so tight, and then price goes like that, it goes like that. Anything up here for me is going to constitute short. Anything down here where you previously had price action to the long side, it's going to be a long. Okay, so you could likely trade it in between while it does its when it does its dance, but otherwise I would just let it move, let it do something to move, and trade it at that point. That's much more preferable for me. Because we've done the pound and the euro, and someone's asked for it as well, I will do the euro pound. The euro pound, you've had weak rejection on your daily. Wouldn't be shocked if you do get slightly higher into here before you fall. It's just because you're slowly getting these higher highs, somewhat higher lows, you could say. It wouldn't shock me if your euro pound comes up to this point, 874, and 8615 is new longs. Okay, so I would hold off. I wouldn't buy it because you're at a short zone, but I would much prefer the price up here because you've got significantly stronger rejection over there. And of course, it's making higher highs and higher lows. So on the face of it, again, with that probability in repeated market via, I mean, you could call them patterns. They're not really patterns. It's just a simple uptrend, a flat uptrend. Okay, some people call it a flag and all sort of wedge, whatever you want to say. I just trade it as it is, and say it as it is. So 8756 is more ideal. So the two euro and pound pairs. Someone has asked for gold. An academy member has asked for gold, so I will just go over gold. It's still short. I said short at 1932. I would still hold the short bias. Wouldn't be shocked if you get near a 1972 to 1982, and I would further DCA there. But you've had this massive impulse bar. I mean, we called it long, called it long, called it long. It's just absolutely exploded over $100. Okay, so there you are. It is short at that point, and that is where. So I'd short it now, of course, and then higher up, 1980 area, I would also look to the short side. Okay, so in terms of indices, is my buy still short? Now, like I said, because I did the pound and I've done the euro, I will reflect on this on an indice market like the FTSE. It is yeah. I mean, my bias hasn't changed because you haven't got any lower. Okay, my bias would change if the market had fallen. So yeah, I mean, nothing has changed for me. I still think there's weak market sentiment in the global economy, like you just had persistent inflation in the UK. Now, it hasn't gone up, but it's not going down, which obviously is a problem for many. So there you go. It is high on your stock oscillator, as are many indexes. And you can see each time that happens, not every time, but each time it's fallen significantly, it's always when you've got a high stochastic. That's the point, really, of indicators. They tell you when the price is high so that you can make an informed decision and stay in line with an average of price. So yeah, my bias on indices is still short, especially with the UK stock market at the moment. So yeah, I think that's it for today. Thanks for coming, guys. I hope that helps. As always, like, comment, share, and subscribe. You can get my free training underneath the stream. It's right underneath there, and on YouTube, it'll be underneath too. And if you're serious about trading, you want to get things right, you want to actually make money, or at least try to with my strategy, and nothing's guaranteed, of course. I'm not allowed to legally say that. but yeah, if you're serious, you can only watch so much free content. You'll be able to contact me once you've got my free training. Thanks for watching, guys. Hope that helps, and I hope to see some serious traders coming on board soon with the rest of us. See you there.